So, today I want to discuss whether the new Labour government can bring down mortgage rates, which have been, battering homeowners for the past 2 years. According to Money Facts, average 5-year fixed rates remain above 5%, while 2-year fixed rates are close to 6%. That's an average, though. I've seen a lot lower rates out there. Big change from 2022 when they're around 2.5%. These are averages, as I said. I've seen some deals at 3.65 for 5-year fixes. But Labour's campaign promised to change this situation and bring rates down. But can Labour actually influence mortgage rates? I would say yes and no. Economists suggest that the party may not have much control over the matter. This is because, interest rates, which in turn influence mortgage rates, are set by the Bank of England, which is independent from the government. The government has little control over mortgage rates, and given the limited differences in fiscal plans between parties, there's little reason for the election to change the outlook for the base rate. They're quite similar in terms of their economic policy. However, by signalling caution, a Labour administration could avoid pushing up interest rates like the Plan for Growth did under Liz Truss. Interest rates are falling anyway. Labour might have come to power at just the right time to see this trend continue. Some lenders like Barclays and HSBC, they've already started reducing rates. In fact, a lot of people have started reducing rates in terms of the sort of lenders out there. And the Bank of England is expected to begin cutting interest rates this year once inflation is brought under control. It's already at 2%, so they've got to make some cuts. Consumer price indexes, inflation, if it stays at 2%, it means that it's at its lowest level since July 2021 and is dramatically down from the 11.1% peak reached in October 2022. So while the Bank of England has continued to hold the base rate at 5.25% at the moment, markets are confident that the first cut will arrive in late summer, so probably August we're hoping for. However, the first base rate cut may not lead to a dramatic reduction in fixed mortgage rates. This is because lenders set their rates based on wider market expectations about where interest rates are heading, and the money markets have already priced in a base rate cut in the summer. So we're not just going to see a bank base rate and then mortgage rates start to tumble. Mortgage rates started this year on a downward trajectory anyway, with markets having dramatically increased expectations of base rate cuts. This then swiftly reversed, and early spring saw a rush of mortgage rate rises. So I think the markets are controlling the rates. Markets are now forecasting the base rate to fall around to 3.5% over the next 2 years. Hopefully those 2 years don't go too long. Even if the base rate is cut in August, it's just not going to result in a massive amount of movement in fixed mortgage rates. If markets feel that rates may be cut harder and faster though, then this could have a good bearing. Fixed rates will always fluctuate according to sentiment, and in recent months we've seen rates edge up before recent cuts, unwinding some of those increases. So right now, the lowest 2-year fixes are hovering just above sort of 4.5%, and the lowest 5-year fixes are hovering just about the 4.2% mark. Earlier in the year, when markets were expecting 6 base rate cuts in 24 alone, the lowest 2-year fixed rates were hovering around 4.2%, and the lowest 5-year fixed rates were below 4%. So, it's an ongoing process of watching what rates are doing. Base rate is projected to fall to either 3.25% or 3.5% over the next 12 to 24 months, but mortgage rates do look like they're going to remain around the 3.5, 3.75 to 4.25%. It's low by historic standards, but is this going to keep borrowing costs low over the longer period? We'll have to wait and see.